Good morning, good afternoon, good evening, everybody. Depending on location, guys. Today's documentary will be about backtesting and how I backtested this week, the result I saw on the narrative behind it. So, firstly, during my daily time frame, I've already saw that the market structure has been bearish. Market has been going down in the sense that since we are trading euro dollar, it means that dollar has been going up and euro is weaker than dollar currently. During the time, as of the time I recorded this. So, I recorded this, I think it's somehow last week or so, or last week. I recorded this last week. So usually during every week, I make sure that I backtest the market to see what and what just to improve. And this week documentary, I did it differently. I didn't do it as my usual. I just said I should try another method, which it worked. Where we are currently now, the chart we are looking at now is on the hourly time frame. How to know that is this point here? Yeah, this is the hourly time frame. And the time zone I'm using, please people go that toggle on New York session in the time zone around, it should be somewhere around there on trading view. You toggle it on, you move it from the current one that is showing you and go to New York. Set your time zone to be on New York, so you understand, on New York, because that's what the market mostly works with. Just set it, be using the one of New York session, because that's where the market mostly works with. Then you see this one, this is the opening beneath it on Thursday, May 8th, New York session time. But in your time zone, if you check it in your time zone, it's not be the same thing. That's why you have to change it into New York session. Don't be using the one that they gave you. Put it on your time zone. The market always open every day around 00 hour, midnight. If you want to trade, if you be trading the London session or the daily session, it's always at midnight that the candles open. So what we usually do is I will mark out from the open price here, extend it out. If we are bearish, we want to see the market go up, tap it, go up. It will accumulate, like here, it will accumulate, acting as if you want to buy. If indeed many people now will see this thing and think as if it's buying, like this candle pattern now, this particular candle here, this blue, this green candle. Retail traders normally know it as, I think is bullish engulfing candle, something like that. They know it as bullish engulfing, so they want to buy. At this point they are buying. But we the learned already, we already understand the market. Since we already understand the market, we know that it's not buying, it's selling. You already know that it's gonna sell. How do you know that? Firstly, market structure is bearish. Beneath it, around the side, all these things are liquidity, a point of liquidity. And I thought about liquidity in my previous video. All this point here is liquidity. So the market cannot just keep going up like this without clearing out these lows. Around these lows, there are stop losses. Stop losses are beneath it. So the market needs to clear it first. It has to clear it. It needs to take it out. It needs to take it out. Then the entry I now use for this one is mostly swing trade. At this point, on GBP/USD and EUR/USD moving correlation. So in EUR/USD, when I saw this trade in EUR/USD, I expected it to come back to this point, because I needed to see it here, tapping this green candle, because that's another block. I needed to see something tapping it here, but as you see, it not reach it. Instead, it just went for the FVG, for the fair value gap. But on GBP/USD, if you go and check your chart on GBP/USD, it tapped it here. On GBP/USD, the thing tapped it, and GA tapped it. Then value structure. Since we want to see it, I told you guys about maybe on my next video I'll be talking about how to identify MSS, that is also known as market structure shift. So what we want to see, displacement, taking out liquidity. It will take out liquidity, then it will now displace, close. This candle should close below it, below this one, mark it out, MSF. The candle should go down with displacement, taking it out, and will not come back. It should not just do it and go back, like just do something like this a week. No, you should do it and the candle should close beneath it. If you are going, expect it to go short, that is if we are selling. Let the thing close beneath it, not a week, not with a week, not with something like this. Like see this one as it went, you just tapped it now and start going up. No, but if you need something like this, let it close below it. This one, the candle did not close, the candle close up there, something like it. So this one now is not valid. I cannot even enter this one on trade sale because there's liquidity on top of it and it has not taken it out. But this one to get out, then we are bearish. The market structure shift is going down, obeying, then we now enter this point, expecting it to go lower, to come down. Market opened here, GU on GU, UPUSD, it tapped it. Because if we are bearish, the thing need to come back and touch the opening price from 12 o'clock AM, from 12 AM New York station Eastern time to 4 PM. The market opened from 12 AM Eastern time to 12 PM. Then that's where we're entering. It came close beneath it, market structure valid, high probability. You set your entry here, or you set it here. You can enter from this point. You can set to enter at this point. If you enter at this point, you put your stop loss at the candle that created this FVG. That is, if you enter from this place here, your stop loss will be above here. Will be above the candle that created it. Favor gap 1, 2, 3. All these 3 candles from the favor gap. This gap that is here. This one, I cannot call this one a gap because of what? It closed it. There is no gap between this high, between this candle's high and this candle low. But this one, this candle's low, and this candle high, there's a gap, which is this point here. This one, this thing. That is what we call a favor gap. You can enter, take your entry from this point. Then, if you set entry from here, you enter. Then you now put it at the candle that started. You put your stop loss at the candle that started it. Then your stop loss will now be here. Your TP, you could just TP out at this point, or you use the next slide that will show you, or you use the Fibonacci. Use the Fibonacci to mark it out from here to this point. Extend it down, something like this. If you want to get that, this one now, if you want to get your TP, your SL, you enter here. Your entry here, your SL will be above this candle that started this IVG, or you put it above here or here. I can see it not hit it. If you want to get your TP, either you put your TP out below this point, because that is the nearest liquidity. Below this point, market will come for it. Below here, if you cannot put it below here, then, or you see that, if you see that this one is too small for you, or it's too small, then you just use your Fibonacci to arrange it the way I did. Then you will now put it from here, mark it out from here. You start it from here, then you now put the end in here. The 1 will be here, the 0 will be here. Then the other is minus 0.5 minus 1.1. Where you now put your TP, you put it at the 1. You TP at 1. You take partials at here. You take partials at that other liquidity. Partial here. Full TP. Don't be greedy. Full TP is 1. Your TP will be here. And see that it just went there beautifully. Within 1 day or so. You can like it. It hit it. Then you are out of the trade. Another entry. Bam. Another entry is here. Market structure shift. Candle close below it. Enemy in time high. Enemy in time high. Intermediate in time high, sorry. Intermediate time high. Intermediate time high. Candle went below it. Created a fair value gap. But the entry is always at the fair value gap. Entry always at fair value gap. FVG is where our entry is. And as you can see, fair value gap above 50% level at a discount, because discount will be from year to year. Above 50%, the same thing as something like this. As you can see, this one from year to year, above 50% is a premium. The market loves to move from a premium to a discount. Above 50% premium, below 50% discount, and we are not buying at a discount. What is above the 50%? This fair value gap that I told you before. So if you put your entry from this point to mark it out, your stop loss here, this how your entry would have triggered. Your second entry will not be here. Your big position you can put it here. Your small position you cannot put it here. Your stop loss will be there. Then your TP, your full TP will not be here. You understand, bro? That is the thing I noticed. Then if any candle, an intermediate time high, if a candle comes back and rebalances an imbalance, also known as fair value gap or FVG, that candle immediately becomes an intermediate time high, in the sense that you don't want to see market come back to this point after it have triggered it and start going lower. It has triggered it, go up. You don't want to see it come back again. At this point now, we don't want to see this one going up to take out this one. Except the market structure of shift, except we have shift from a daily buyer, from a bearish buyer to bullish. And that's when we start expecting to start turning this one now from intermediate time high to liquidity. Here you want to see the market start going up. That is if the buyers have changed. If the thing has moved from bearish and to bullish, then that is when you start expecting something important like this to start forming. Here, you put your entry. Market structure shift. Market structure shift bar. Fair value gap above here. Entry. You set your entry here, your stop loss above this point or above here. Above here or above here. That's where your stop loss will be. You put your entry here beneath here. This blue line, this first blue line, you put your entry. Your stop loss will not be above here. Then your TP, the same method that I told you the first time. You use the same method that I told you. Using this one, you mark it from here to this point. You use 1 as full TP. Then you now use half, which will be here. You use here as partial, you take your partials here. Then your full TP will not be at 1. Then you're out of this trade. You see, I see this here first. Full TP will be at 1 from here to here. Sorry, from here to here. Mark it at 1 point. Yeah. Then we are out of this trade. Nothing concerns us with the trade anymore. We have gotten our bag, then we are out. Bam, bam, bam. That is it. So that is for today's farms. And this one now is when the market started going back up. As you can see now. This one I took a short entry around there. And I took my partials, 50%. Just like I told you people. You take your partial 50% here. I took the entry was around here. So this one was not on 1 hour time frame though, it was on the 5 minute 36. I took it, my entry was around this point. This candles here was where I did my entry, but on GU, it was on GBPUSD, not on EUR, because the pattern was more on GBPUSD other than EUR. I didn't see something nice on EUR. So the entry was on GU. You take it, you mark out the displacement from the top. There is something below the below leg, 50%, bam, 100% TP, which actually I know we have to give guys 50% of our trade now, so we are guided, we are at break even. And this one was the what we are forecasting for the week, but that's all this things. So market should just trade. No. So that's it. That will be it for today, guys. See you, God willing, next week. That's what I was talking about from here to here. 50%. This one. If you back out from this point here to this point, the 50% level should be around there. That's where we now take our TP. We TP out of the trade. So take care, guys. Peace.